we have to understand the motivation behind why John is trading and why Lisa is trading. Obviously, for John, this is a side income. He already has his 9 to 5 job, he is already earning a full time income from there. So, from trading, he is just expecting a side income. So, that is the reason why he has chosen to go for the positional. Plus, he doesn't really have the time to do intraday trading. So, side income is his motivation. So, he wouldn't want to get into too much depth of the markets. As long as he understands the target market that he is trading, he is more than satisfied with that. Compare that with Lisa's situation. This is full time for her. She is investing 6 hours per day, almost 6 hours per day, Monday to Friday, into this, which is a lot of time, almost 30 hours per week. So she wants to make a high return on energy. So this is her main income. So she is going to put in a lot of effort to generate returns. So her execution needs to be flawless. The market that John has chosen is the futures market, and Lisa is trading intraday in the spot market. Futures market brings with it its own complications. You have to understand margins, you have to understand lot size and leverage and things like that. And you have contracts, you also have expiries. So there is a rollover cost when you go from one expiry to another expiry. You have to exit one contract, get into a new contract. There is a cost attached. Spot market intraday is relatively simple. You get in and out of the stocks on the same day. Here the timings are 8 hours for John and 6 hours for Lisa, but this is fully utilized 6 hours. She is working full capacity in this 6 hours, but this is just the trade timing. He is not in front of charts the entire 8 hours. He is only looking at the charts maybe 5 minutes per day, that's it, because you have to check the candle every 3 hours. Trading method, he is more about selection. He is trying to find trading opportunities on every time frame, the 3 hour, the daily, the weekly, the monthlies. He is trying to select the time frame, select stocks, trying to find out trading opportunities. He is actively looking for them. Here Lisa is not looking actually for trading opportunities. Her method is elimination. You start with 100 stocks and you drill down to at least 2-3, and that is what you trade. As discussed before, the depth of analysis required for John is more because he is only trading a few instruments. Compare that with Lisa, she just have to screen through the 100 stocks, and whichever she finds best when it comes to having a good candle pattern and plus extra confirmations, she doesn't need to do much analysis there. Sample size duration, well, since John is trading positional, sample size duration means how long will it take for you to complete those 20 trades. Obviously John is going to take more time because first he will not find too many trading opportunities. Second, even when he finds them, when he takes a position, it will take some time to materialize because you might want to be in a trade for maybe 3 days, 4 days, maybe more than a week. Okay. Lisa, comparatively, she can complete her sample size in maybe 10 days, assuming she takes 2 trades per day. So within 10 days she will be done and she will have her results so that she can work that feedback loop we discussed. Charting software, John, since he is trading futures, he is looking at investing.com, which gives him long term charts of currencies, and then he is coming back to his original broker platform and then trading the contracts based on those currencies. Lisa, on the other hand, she is trading with a broker, and her charting software is also a broker because she is trading stocks. She can have the entire stock history for the entire life of that particular stock. And of course, both of them are not into fundamental analysis. They are purely into technical analysis. They don't even watch the news. They don't even bother about the news. They don't even watch the financial news media. All they are focused on is the chart. What is the chart telling them? So this is probably the one thing that is common between John and Lisa. They are simply looking at the chart and they are trying to analyze the price. That is the reason why they can take the weekends off and relax. No problems. You can only be in front of charts when the market is on. Maybe Some work you will have to do post market, which is called as post market analysis, but that's about it. Price is the only component as far as John and Lisa are concerned.